So today we're going to be going over um, my setup and my framework that I like to use. We're going to go over that very, very quickly. And then um, it's looking like we could get some potential price action this morning that I may want to participate in. So we'll see what happens here this morning. Yeah. So I think we could probably find a setup this morning, to be completely honest, with the volume that is taking place and what we currently have in the marketplace right now. So I definitely could see, yeah. Yeah. So I could definitely see continued volatility in the marketplace. I think we have some draws on liquidity here this morning. And so, guys, put in the chat where you guys are, like in your trading journey, like whether you're a beginner or whether you've been trading ICT for, either a year, 2 years, maybe a couple months. Just put in the chat. Hey, what's up, boys? Nice. Let's go. So yeah, what we're going to be going over very, very quickly is my trading setup and my trading plan. And then once we go over that very, very quickly, I'm going to be potentially hunting for setups because I do see some potential draws on liquidity being hit this morning. Okay, nice. Yo, what's up, Raymond? Good to see you in here, bro. But yeah, so we're just going to be going over quickly, very, very quick, the optimal advanced setup. Okay, so this is a setup that I've been trading for a while now, and it's my blood, sweat, and tears through 5 years trading with ICT and the mentorship. And it is a very, very good trading plan. It's very, very beginner friendly. Raymond, if you're just getting back into trading, this is going to help immensely. It's very beginner friendly. It gets you right back in the swing of things. Very, very simple trading plan, guys. Right? And the reason why I talk very, very highly of the setup, obviously it's my setup that I use, but at the same time, it removes a lot of the discretionary part of ICT's concepts. And that is why I am a huge, huge fan of this setup, right? I think a lot of us, for the most part, right, we struggle with our psychological makeup in our mind, right? And that's where a lot of traders don't make it, right? Is because of their impulsiveness, because of their risk management, because of their fear of missing out or the greed that they may have, right? And so this trading plan that I'm going to be teaching you guys right now, it actually goes to war against those things that we combat in our mind on a daily basis as traders. And so the setup, right, that we target here at Optimal Advance is a internal range setup to external range liquidity, right? So liquidity, right, if you guys are relatively new to ICT concepts, right, so you have internal range liquidity, right, which either comes in the form of a fair value gap, a balanced price range, or a order block, right? And typically the balanced price range will be within the order block, and that's a very, very important thing to take note of when you guys are using order blocks, right? Is look for a balanced price range within that range, right? But so that's internal range liquidity. So we have, I'll just type it out for you guys. The internal range liquidity that I use, okay, that we use here at Optimal Advance is we use FVGs, okay, order block, and BPRs. Okay, this typically comes inside the order block, right? And so if you guys have been watching ICT for a long time, you know that ICT talks about mean threshold or consequent encroachment of specific PD arrays. And so the mean threshold of the order block here, right? You're oftentimes going to find a balanced price range, right? So we have this order block in here, right? And there is a small balanced price range in here, right? So you have this candle's high to this candle's low, right? There's an inefficiency in price, okay? Where price trades down below through this area, right? This now becomes a balanced price range, right? So when price comes back up to this area, it's going to act as a brick wall, okay? Especially if you're on the right side. For me personally, the balanced price ranges are the most powerful ICT tool that you can use, and it is necessary for A+ setups, right? If you're just trading a order block and fair value gap, right, that's fine. But for me personally, I don't enter trades unless they have balanced price ranges, okay? Either on the sell side of the curve, right? In this example, in this trade here, which I was targeting, or more importantly, to be completely honest, is you want to have that balanced price range or the breaker on the buy side of the curve, right? So for me personally, I really need one PD array within the, or two PD arrays within the range that I'm going to be trading, the internal range that I'm going to be trading. And I also need a PD array on the opposite side of the curve, right? For example, here we have a breaker mitigation block, right? So this is one of the PD arrays that I look for on the opposite side of the curve, right? Because you have market maker buy model to sell model. Yes, this is in a more or less a consolidation, but the same thing applies, right? So if I'm going to be looking to go short, right, to target sell side liquidity from internal range, so from low to high, right, within this range here, we're going to be looking to go short. Okay, I need PD arrays on the opposite side of the curve, right? So in this example here, we have this breaker, right? So this is a breaker that we could use, and this is something that I want you guys to note as well. Whenever we're using PD arrays on the opposite side of the curve, the market maker buy or sell model, you guys want to be looking for balanced price ranges in and around that breaker, right? These are also going to be very, very powerful PD arrays, right? So when price was trading up here, okay, we have a balanced price range within the original order block, okay, which is this first box in here. Price trades up into that, right? These three consecutive up close candles, this is the order block. We have a small little fair value gap in here. We have a breaker, and then right beside the breaker, we have this sneaky balanced price range. So this is exactly what I look for in my A+ setups, and this is exactly what is going to occur in your low resistance liquidity runs, right? So this is going to be essential to your trade selection, is really identifying the balanced price ranges within the order block that you're going to be using, as well as on the opposite side of the curve that you're trading. Okay, so in this particular example here, okay, price is trading higher into a premium, right? So from this swing high to this swing low, price trades up above 50% of the range. So if you guys are familiar with Fibonacci and stuff like that. I used to use Fibonacci. At this point right now, I don't use it really at all, but just for a visual. Okay, so from swing high to swing low, price trades up into that optimal trade entry area, right? So the 79, 70.5, and then 618, right? So price trades into that premium market, into all the PD arrays that we just mentioned, right? And then the signature that I use, okay, and if you guys are familiar with Optimal Advance and the framework that we use, I need to see this right here. Okay, so this is called the Williams percent R, right? It's Larry Williams indicator, and this is essential, okay, for my trade selection. I don't take a trade unless this occurs. Okay, so if you guys are familiar with the concept SMT, right, within trading and with the ICT community, so SMT basically equates to a change in state of delivery. Okay, so there's 4 stages of delivery. If you guys look at month 1, episode 1, okay, in ICT's 2016 core mentorship, I highly recommend you check that out. Very, very important video. Very, very important, right? If we can understand the 4 stages of delivery, right? So the first one is going to be consolidation. The next one is going to be expansion. The next one is going to be retracement. Okay, the next one is going to be reversal. Right, so when we have SMT, guys, right, for example, I'm going to show you guys this very, very quick. So here, right, in this particular example, if you guys see the cursor, right, so the cursor is showing up on both charts, right? So we have Bitcoin here and Ethereum, right? So as price is trading up into this fair value gap here, right? If you guys are completely new to trading, I would highly recommend looking at ICT's core concepts, okay? And I will highlight some of the videos and stuff like that that I would recommend at the end of this live stream. Okay, if you guys are brand new to ICT concepts, you guys are gonna have to check out the videos that I recommend. Okay, very, very important. So in this example here, right, you have SMT divergence. Okay, so SMT basically just stands for smart money technique. And so, like I've mentioned over here, okay, it indicates a change in state of delivery. Okay, a change in state of delivery. And the only types of delivery that we can get in price that the algorithm will book is consolidation, expansion, retracement, and reversal, right? So when Bitcoin comes up here into this fair value gap, okay, and we failed to take out this high, but Ethereum, right, is taking out its respective high, right? So this is SMT divergence. So it's indicating a change in state of delivery, right? You have one asset class, right? Because they're correlated, they should be moving in sync, right? So when they don't move in sync, it's indicating to us that we're going to get a change in direction a majority of the time. So again, here we're failing to take out this high, but on Ethereum, we're taking out the high, right? And so this is actually going to lead me into one of the things that I really want to talk about today. Is power of 3. Okay, very, very important. This is one of the other things that I would highly recommend if you guys are new to trading, or like Raymond, for example, he's just getting back into trading. Study that first video on ICT's 2016 mentorship. Study that a lot. Okay, because if you can understand the stages of delivery, it's going to help you a lot with trade selection and money management a ton, right? Especially with using this tool, which we're going to get there eventually. Okay, but I'm just going to touch on power of three here very, very quick. And so there's two types of power of three, okay, that are typically known to the ICT community, right? And so the first one, right, because like I mentioned, the 4 stages of delivery, when you have SMT, power of three is at hand, okay, a lot of the times, right? And so the first power of three, which we have on Bitcoin, is consolidation, retracement, expansion. Right? So this is the power of three that we get when we fail to take out this high, right? So we're consolidating in here, okay? Price is accumulating orders above and below the marketplace. As price trades back up into this fair value gap in this balanced price range, right? Retracement, expansion, okay? Down for the lows, right? On Ethereum, right? The power of three, okay, that we're seeing here, okay, is consolidation. So all moves have to start with a consolidation, guys. And when price is consolidating, okay, what's actually happening is they're building orders above and below the marketplace to move the market, right? The market has to build in liquidity for the market to move. If there's no orders, okay, the market's not going to move. So when you see price in the happening, okay, second thing here in this power of three, when we go from when we have SMT and we take out the higher, so this is consolidation, expansion, and then reversal. So if you guys are going to be trading optimal advance, right, which is going to be talked about a lot in this Discord, we're going to be predominantly targeting internal to external range liquidity, right? If you want to trade turtle soups and stuff like that, okay, and this type of power of three, right, consolidation, expansion, reversal, right? So these are the two types of power of three that I really want you guys to study. Having a key understanding, I'm going to emphasize this a lot today. If you guys can understand the delivery of price and how price books, right, in the 4 stages of delivery, consolidation, expansion, retracement, and reversal, okay, and you apply this tool down here, which we're about to get into, okay, we're going to have a lot easier time picking PD arrays, okay, picking fair value gaps, picking order blocks, right? We're going to have a lot easier time picking the correct PD arrays, okay, getting on board with smart money. It's going to become a lot easier, guys, if you guys can understand this, right? Very, very important. Very, very important. Okay, so moving right along. Okay, we've covered power of three. We target internal range liquidity on or in optimal advance. So we're going to be talking about now the William percent R. Okay, and so the William percent R, if you guys see my YouTube, and like I mentioned before, I don't take a trade unless I'm given this signature. Okay, and it's just the way it goes, right? This is A+ setup, right? And oftentimes when I have this signature, I'm going to be getting the second leg of distribution, okay, which is the lowest resistance liquidity run in the whole market maker buy and sell model. Okay, that's the only trade set up by trade. I don't trade anything else. Okay, I only have one model and this is it. And I just stick to this. So when we apply SMT, right, like we just went over it, okay, So when we have SMT in a price chart, like I mentioned before, the change in state of delivery is going to happen, right? So when we have SMT, it's letting you know the time, and it's letting you know the price in which the state of delivery is going to change, and what levels the smart money community or the banks are going to be accumulating their shorts or their longs, right? So I've taken that principle, I've taken that concept, and I've now applied it to Larry Williams indicator. Okay, and if you guys don't know, I'll go over the settings here, but I do have a video on the settings as well on my YouTube. And so applying that same principle of SMT, right? You want to use the Williams percent R for internal range setups. Okay, SMT, what we just went over, right? We were using highs and lows, right? In the price chart specifically, right? So price came up into this fair value gap, and on Ethereum, we took out the high, right? So we're taking that same principle, that same concept, and just applying it to this indicator. Okay, so in this particular example, in this trade here, we have the indicator, right, the Williams percent R, coming up, taking out the respective high here, right? So when the indicator comes up and takes out this high, at the same time, okay, we're failing to take out this respective high while coming into the balanced price range, the breaker, another balanced price range over here, the order block, small little fair value gap in here. I am going to be going short. Okay, why? Because the SMT, right, the concept that we just went over, it indicates to us a change in state of delivery, right? And so when we're targeting the internal range liquidity, we're going to get this type of power of three all day long: consolidation, retracement, expansion, right? So what do we have here? Consolidation, retracement, expansion, right? So you can see the same power of three that's happening here: consolidation, retracement, expansion. We have that exact same criteria and concept playing out here, right? Consolidation, retracement, expansion, right? And all these little arrows in here, guys, all these trades that I took yesterday, okay, this exact same framework, just on a lower time frame: 10-second charts, 15-second charts, 30-second charts. So if you guys are on here and you guys are a beginner in trading or in ICT concepts, this tool is going to help you with your impulsiveness, your trade selection, your fear of missing out, right? It's going to remove some of those discretionary, some of the discretion in your trading, as well as some of the emotion that we face as traders, right? So this is a great tool, not only for identifying, the correct PD raise to trade, but also for your psychological makeup in the battles that we all face as traders, right? Very, very useful tool. I think this tool right here is going to be one of the most widely used tools in the ICT community in the next couple of years. I think it's very, very valuable for a plethora of ICT traders. Like for me, for example, I've been trading for 5 years, but this plan here really helps me capture low resistance liquidity runs, and it helps me preserve my mental capital, to be honest, because at this point I take quite a few trades a day, trading on the microsecond charts, 15-second, 10-second, 30-second. So when I have this framework here, right, I can be taking 4 to 5 to 6, even up to 8 trades a day. I get this exact same fractal, as you guys can see here, many times throughout the day, right? So it preserves my mental capital. I have a lot of conviction and confidence in this setup, and over time, if you guys use this, you will too. 100%. 100%. And if you guys are a ICT trader and you guys have been trading for quite a long time, right, this is going to help you with precision, big time. Okay. I'm going to be dropping my YouTube plan. Yeah, it is my YouTube plan in the Kingdom Discord, right? And so I'm going to be dropping that probably this weekend or maybe early next week. You guys are going to love that, and I highly recommend you study that. But there's some things in there that if you have been trading ICT for a long time and you're a profitable trader, going back to the ranges, or sorry, not the ranges, we'll get into that, but the delivery of price, right? The 4 stages of delivery, right? So the delivery, okay, is actually, it's predetermined in time and it's predetermined in price. So in terms of price ranges. So I'm not going to touch on that too much. Maybe we'll touch a little bit more on that moving forward into the next stream, right? But so again, guys, this is a very, very powerful framework that I use, and also my students have been using. And I know this is going to be very, very valuable if you've been trading for a year, 3-4 months, even 8 years. Okay, this tool is going to help. I know ICT traders don't necessarily like indicators, and you know what? I think this indicator is going to change the game for a lot of people who struggle with psychological issues, like we all do. Like, the setup is all over the place, guys. If I'm being completely honest, once you study this, you guys are going to realize very, very quickly how frequent this setup happens. And you can only imagine what it looks like on a lower time frame, 15-second chart, 10-second chart. The setup's happening all the time. So we have an example of it right here. Okay, balanced price range, fair value gap, order block in here, right? And look at the William percent R. Okay, so the William percent R is taking out the respective low. At the same time, price is coming into a discount market, right? Balanced price range, okay, order block, fair value gap. Price begins to expand for the imbalances over here, right? So this is just one setup, guys. And we also have an optimal advanced setup right here that just formed. And this is actually a really good example. And I'm going to show you guys how I would manage trades, and how this tool that I'm showing you guys is very, very productive in terms of managing your equity and helping you not blow accounts. Very, very useful tool. Okay, so in this particular example, okay, we have taken out equal highs up here, but I'm going to pop out to an hourly chart to show you guys as well what I potentially see for the day. So yes, we just took out liquidity here, but if we want to continue moving higher, I like this range high over here. Okay, we traded into a fair value gap here. Okay, order block. So price moving away from here, right, indicates to me that we may want to move higher to attack some buy side liquidity. And so when that happens, guys, we just begin to look for the framework that I just explained, right? And so at this present time, we do have that framework. Okay, so we have fair value gap, breaker, okay, and we have the optimal advanced signature. So the William percent R is coming down, taking out this low. At the same time, the price chart is not taking out the low. Okay, and so how I would manage this trade, for me personally, I like trading setups that look more like the one that I participated in last night. I don't typically like to use breaker setups. That's just me. Like, I like focusing on the order block, the fair value gap and the balanced price range. That's my cup of tea. My eye's not fixated for the breaker. But so in this particular example, right, breaker, fair value gap, William percent R. Okay, so if we got in here hypothetically, right, and price started to move away, what kind of delivery are we going to be expecting? We're going to be expecting expansion, right? Because we want to be getting in low resistance liquidity runs. And if we're not in low resistance liquidity runs, we do not want to be in the marketplace. At least for me personally, and my students, we do not want to participate in anything other than a low resistance liquidity run, right? Because we're going to preserve our mental capital. We're going to get immediate feedback. And if we don't get the delivery that we want to see, we're most likely going to be on the wrong side, right? And so in this particular example, we come down, trading into this gap, breaker, we start moving away, right? So when I see price trade back down into this fair value gap, okay, and the William percent R is actually coming back below this original low, this indicates to me that this trade is not a low resistance liquidity run, right? This is going to be a reclaimed fair value gap. And as time moves on, when you're in a trade, guys, with the optimal advanced framework, and you don't get immediate reaction, okay, you're gonna have to manage your trade. Well, at least for me personally, I manage my trade very, very tight, right? Because I'm getting so many setups on a day-to-day basis, I can find another framework within the next like 30 to 40 minutes, right? Or even sooner than that. So we're going to monitor this. I wish I took this. I wish it's okay. We're going to be live trading quite a bit on Fridays. And so we want to see big, beefy, bulky candles. Okay, similar to this, right? Notice how in this example, price dumps down, consolidation, retracement, expansion, right? William percent R characteristics. Notice the feedback that we get. Are we getting the same feedback over here right now? No, we're not. Okay, we're consolidating, right? We're still within the range. If we were really bullish, we would have been getting characteristics like this rather than price consolidating, right? This is what we want to see. We need to see speed and this high here get taken out within the next, I would say, 3 to 5 candles. Okay, we want to see this high taken out. Just looking at the comments now, guys. Yep, so the William percent R will fail, right? If you don't have the right context and you don't have the bias right or the draw on liquidity right, you will get chopped up, right? So if your bias is not correct and you don't have a clear draw on liquidity, you're going to get chopped up, right? So that's why I highly recommend. You guys will see in the trading plan that I'm going to be putting in the Discord that you need a clear draw on liquidity, whether it be fair value, internal range liquidity, or external range liquidity, so highs and lows. Let's see the time axis. Yeah, my resolution settings. Actually, here, I'm going to try and fix it right now. Oh, that's annoying. Okay, so we're gonna watch this play out here. Yeah, take care, bro. Have a good day at work. Um, sorry guys, I'll have that fixed next time I hop on. I was kind of rushing this morning. It's kind of all over the place this morning, so forgive me for that. So next stream it will be a little bit better in terms of the settings on the screen. Will you check SMT with ETH at the same time along with holding %R? So if I'm looking at like a higher time frame PD array, okay, if I'm looking at a higher time frame PD array, I want to look for SMT within the chart. And then once we create that market maker buy or sell model, then I'll drop down to a lower time frame and then target the setup that I'm showing here. Right, so on the higher time frame, I look for SMT within the price chart, and then once we start making or creating a market maker model, what I'll do is I'll go down to a lower time frame and then hunt this setup that we're talking about right here. What time frame do I trade the most? I typically trade either anywhere from the 3 minute. The 3 minute is probably the highest I go, down to a 10-second, 5-second chart. So notice how we're not getting the delivery that we want to see, right, in terms of the power of 3, right? And this is also why, guys, when you guys are trading this setup, note that if you guys get an expansion like this and we come right back into the range, there's no consolidation up here, right? So you can reasonably expect a little consolidation by your entry or within this range before we either break this high or break this low, right? So note that, very, very important, right? As opposed to this setup over here, right? You have that little consolidation here before we retrace, right? In this particular example, we don't have that, right? We have price expanding and then reversing essentially. Okay, there's no consolidation here, right? So again, you guys have to study the things that I mentioned, and it will help you guys out quite a bit. Right, so how I would personally manage this trade, guys, if I was in long here, right, hypothetically, my stop would be below this low. And you guys are going to find out why. I hope it comes down and takes us out. I don't think it will. But you guys are going to see how price is compressing in here, right? So price will go from contraction to expansion. Contraction to expansion. And so because we're not getting the delivery that we want to see just yet on the buy side, right, as time goes on, okay, our trade idea may be wrong. Right? If the trade is not going in your direction, giving you immediate data or immediate confirmation that your trade is valid, okay, we have to reconsider the trade idea as a whole. Right? I don't like being in low resistance liquidity runs. Like, I don't like sitting in here and this just banging around between the range, right? And so you're gonna note, right? If we take out this high or this low, it's gonna do so with speed, right? And so if we take out this low here, we're most likely going to be taking out the low where our original stop would be, right? So that's why I put my stop here. I'm mitigating risk. I'm managing my risk, preserving my capital in that sense. And that's also another reason why this tool with the 1% is very, very useful, especially for new traders. Especially for new traders. Yeah, Jay, this is like this framework here. It's applicable to all asset classes, all time frames. Like if you go and study oil right now, you'll see this setup everywhere. If you go study soybeans, stocks, Forex, gold, you name it, this is going to be there. This fractal. So we're going to watch as this plays out, right? You're going to see big candles here, either to our stop or to this high, right? Obviously, we would rather see price take out this high because we do have a higher time frame draw on liquidity, which is this high or this line up here. Okay, we're currently in a fair value gap order block, right? And note how I mentioned, I'm gonna pop down to a 1 minute chart here, right? The order block, right, on that 2 minute chart, look what we have in the middle of that range. You have a balanced price range. So if price trades through this low here, I suspect this low is going to get taken out pretty quick, right? But if we begin to take out this high with some speed, then we're going to come for here. We're going to get some speed very soon here. Right? And for me personally, if I do have multiple positions on, or let's say I have like 5 lots on or 5 contracts, whatever you're trading, okay, you could be scaling out as well. Like, I'm perfectly okay with that. I don't like touching my stop loss and my TP. Well, I don't touch my stop loss until my first objective gets hit. Or I have delivery signatures like this where I'm potentially going to be on the wrong side. Right? So if I'm in, let's say, 5 lots or 5 contracts, if price is hanging around in here, I could scale out of my position a little bit. Scale off 1 as time goes on. If I'm in the trade for, however long and we're not getting the delivery that we want, I can scale out 2. Right? Because as time passes on, right, you got to understand that these deliveries that we're going to get in price, consolidation, expansion, retracement, reversal, they have a predetermined range and they have a predetermined time. Right? So when you're not getting that displacement or the range that you're expecting within a certain amount of time, you're most likely going to be on the wrong side. And if we're most likely going to be on the wrong side, I would much rather lose less than I anticipated on losing, right? And a lot of traders, this is a huge key. I want you guys to listen. It's very important. If you guys are in a position like this, I have no problem taking losses. I take losses all the time. Okay, all the time. Every week I take losses. But what you guys have to understand, and you guys have to shift your mindset, is losses, if you lose less than anticipated, that is a huge win. Huge win. Why? Because what's the first thing that we want to be doing in trading? We want to preserve capital. And if you can preserve your capital, first and foremost, you're doing a great job. Right? If you get in a position here and say I was risking 2%, and say it slides through our stop here and takes out this low, and we only lose 1%, that is a huge win. Huge win. In my mind, and some of the best traders' minds in the world, losing less than anticipated is a massive win. Massive. It's almost more enjoyable than having a trade pan out, to be completely honest with you. Very important, guys. Right, we're going to take losses, but if you can lose less than anticipated, man, oh man, you're going to surpass 99% of traders right now. So watch, this is the other thing too, not going to get too much into this. I have lots of things to talk about, guys. Lots to talk about, to be honest. Yeah, Jimmy, I think so too, eventually. Do you consider the macro? Yeah, I do. I have certain times of the day that I like to utilize because I'm trading on a 15-second chart, 10-second chart. Um, I break down. I'm gonna I'm gonna answer that question, Jay. Come back to another live stream, um, because if I have to hop off here in about 10 minutes, and it may take a little bit more than that for me to talk about time. Time is very, very important, and I will go over it and I will touch on it eventually, but just not in this stream. I only have like 5 to 10 minutes left here. Right, so popping out to a 3-minute chart. We do have optimal advanced signatures here again, right? And the fair value gap is a little bit bigger. Jimmy, so how many trades do I usually take when I'm using the 10-second chart? It all depends, right? Depends on the market environment. Like 2 weeks ago, I believe, really, really good market environment. Very, very nice. You just have to pick and choose um, the setups that you want to use when using this model. Um, but yeah, I would say I can typically get like, to be honest, sometimes upwards of like eight setups a day. But again, I'm not trading 8 setups a day. There's 8 opportunities, like pretty good A plus setups, A plus setups, but I'm really only taking 4 to 5 at the max. Um, is Bitcoin not supposed to go bearish before the halving, or just the contract or contrary? Um, Personally, man, I don't look too deep into that kind of stuff. I find like this is my fast lane. This is my bread and butter. This is what's going to make my dreams and my goals and also others become a reality. So I don't typically look at that kind of stuff. For me, I'm a technical scientist. That's what I do. Um, Obviously, yes, fundamentals do drive the market and stuff like that. But for me personally, I can see, right? And when stuff like that comes out, like big news events and big events that really move the market, I'm not going to trade that day, right? Especially on like things like you're talking about there, like the halving, or say like a war or whatever, comes into the marketplace, or whatever. I can just wait after that happens, wait till the market smooths out, and then continue to trade this exact same setup. Where are you guys all from, by the way? There's 16 people in the chat watching the stream. Let me know where you guys are all from. Right? So in this particular scenario, we want to see big candles. Right? Remember, like I mentioned before, guys, we have an expansion. This is essentially, to me, a reversal. To me, I like seeing expansion. I like seeing consolidation, retracement, expansion. Here we didn't get that. And so, nice. India, Hungary, nice. Chinese, that's awesome. Singapore, that's awesome, guys. It's good to have you guys on here. I truly think that UK, nice. Whereabouts in the UK? Australia, Nice. I have family out in Australia, actually. Norway. Nice. This is awesome, guys. It's cool. I've been using the 1% R for a while, and it's helped me, especially with trend continuation trades. Yes, exactly. So when price is in a clear market maker buy or sell model, you're going to be getting these signatures quite a bit. That's funny. Oh, nice. 1:30 a.m. Sweet. Yeah, I need to get out to, honestly, I need to get out to UK. I have a couple buddies out there. Um, Australia, I haven't seen my family out there in a while. Definitely need to get out there soon. But yeah, guys, if you are who's if you guys are not in the Kingdom Discord, okay, I want you guys to join that Discord after this live stream. I'm about to hop off here in 7 minutes. If you guys are not in the Kingdom Discord, I'm going to put the link in the description. I'm going to add it after the live stream is done. So go back and make sure that you guys join that Discord. It's a free trading Discord. Okay, there's going to be tons of value. Okay, there's a couple, we have like 3 to 4 trading mentors that are probably going to be alternating throughout the weeks, doing live streams, providing data. Actually, yeah, I can probably add the link right now, eh? Yeah, I'm going to put the link in the chat right now, and we'll see if it works. Just give me a second here, guys. Nice. South America. William, nice, man. That's my name too. Okay, I just put the link in the live chat. Yes, I am Canadian. My family is originally from, I'm like pretty much full blown Irish and Scottish, but a little bit of German, a little bit of native. Yeah, there you go. Yeah, one of my best students, William, is from South America. He's also in the Discord. Really, really solid guy. But yeah, guys, in this Discord, we're going to be doing a lot of stuff. There's going to be a lot of stuff thrown at you. It's completely free, by the way. Introduce yourself in there. It's a very nice, friendly community. There's a lot of Christians in there. But we're going to be doing live streams 2 to 3 times a week. There's also going to be like Bible studies and, faith-related topics and discussions over there as well. It's a really good place to be. There's going to be so much free. It's going to be insane. The amount of value that's going to be in this Discord going forward is going to be absolutely incredible. All right, guys. So we're just going to watch this pan out here. Actually, I only have 4 minutes. I got to go. I have a pretty busy day here. But yeah. Thanks, Mohammed. Take care, man. Hope to see you guys in the Discord. It's gonna be incredible. All right, guys. I'm actually gonna head off here a little bit early. If you guys are at the charts, watch how price pans out in here. We're going to get some big candles either lower or higher. Okay, price has been contracting for quite a long time in here, and so we're going to be getting some big candles very, very soon. So with that being said, thank you guys all for joining. It was awesome to have you all, and hopefully we'll see you in the Discord. And if we don't, until next time, good luck and good trading.